HDFC Bank has actually reported sort of an inline set of numbers. Look at the stock also, not much move coming in, and it does have a very decent weightage to the Nifty as well, Nifty 50 as well, around 8%, 8.5% weightage. So, before we jump in, that's going to be our lens topic. We will be discussing HDFC Bank today. But before that, let's go across to Harsh and understand how the earnings have actually turned out for HDFC Bank in Q3. What on lines it is on lines, but for more details we'll get on Harsh on board to understand the earnings. Harsh.
Well, HDFC Bank has kick-started the earnings season for the banking sector, the Q3 FY22 earnings season, and a pretty much in line set of numbers declared by the bank, exactly what we expected at ET now. And the revenue has grown 12% to the 26,500 crore mark. The net interest income has grown 13% at just below 18,500 crores. And PPOP saw a 10.5% growth. That's coming above the 16,500 crore mark. But asset quality had been a concern in Q1, and that has been steadily improving. If we look at the provisions, they've come down strongly. Provisions have come in at 3,000 crores in this quarter. They were at roughly 3,400 crores in the same quarter last year, and it was nearly at 4,000 crores in the previous quarter, which is Q2 of FY22, which will definitely have an impact on credit costs as well. Gross NPAs have improved around 10 basis points, and net NPAs have improved around 3 basis points, and NPAs have now come in at 0.37%, a definitive improvement there. And that's obviously led to a better profit after tax number, 18% growth, good jump there in PAT, coming in at 10,342. Core NIMs have come in pretty much stable at 4.1%. Now, when we look at credit costs as well, they've fallen very well. So at this time last year, it was at 1.25%. It rather increased to 1.3% in Q2 of FY22, and it's come back down to 0.94%. That looks heartening for HDFC Bank, but pretty much in line set of numbers from the bank. Good, strong growth.
Thanks so much for that update, Harsh. Let's get our experts in then. We've got Sharmila Joshi as well as Kunal Bothra joining in. Good morning to the two of you. I'll come to you first, Sharmila. And if you talk about the three frontline private sector banks as a pack, ICICI Bank seems to have bridged the gap quite substantially with HDFC Bank on the valuations front. How do you read these numbers, and do you think that HDFC Bank is a good buy at this juncture, and that a large part of the underperformance has to do with FII selling, which I think this bank bears the brunt of?
Yeah, so a lot of questions in that. Let me try and answer them. So first off, I think I do like ICICI Bank. And let's not forget that ICICI Bank went through, like 2 or 3 years where stock price didn't move for a whole host of reasons, some corporate governance, etc. So ever since the new management took over, it was very apparent that even if they just kept doing like standard things, the stock price would move, in a better manner, which it did. And I think the last quarter numbers were, to my mind, they were, something that would make you re-look at the bank. And I think that's precisely what has happened. So I think it continues to be my favorite play within the private banking space. Coming to HDFC Bank, I think the exact opposite has happened here. They've been the stock price has been languishing for quite some time now. I think it's even among the banking stocks and among the leading names has been an underperformer, which is surprising given the fact that the numbers are fairly strong. So they've also had a whole host of issues. I think they had that credit card issue. They had some other issues with their network, etc. And they've had a management change. So the point being, sometimes when banks are going through this phase where management has changed, as well as there are other issues, you do see stock price languishing. But the numbers have been fairly strong, and 18% growth for the kind of size, the size that HDFC Bank is as of today is not a mean feat, and it's something that they've pulled off quarter after quarter. So yes, I'm extremely positive on HDFC Bank at this price. And the last point I'd like to make is that, in fact, what we've really seen is that not just HDFC Bank, But even some of these other private banks have actually taken business away from PSU banks. The kind of credit growth that they've shown has been strong. But what it means, what I'm trying to say is that that credit growth is not equal across the banking sector. So in fact, I think when numbers will come, you will find that they have taken business away and they have gained market share. And HDFC Bank has definitely gained market share over the last 5 6 months. So I think this stock price thing will sort of correct itself. Maybe market, just as you said, FI selling or whatever reason. So those things will take care of themselves in the longer run. But I think given the price that it's at and the kind of numbers that they have delivered, I'm extremely positive on HDFC Bank.
Okay, Sharmila, surely, stock price will correct is what you're saying, and you're quite positive on HDFC Bank. But Kunal, coming to you, when I'm looking at the charts and just looking at the graph for HDFC Bank and Nifty banks, when you look at it, it's HDFC Bank has been a clear underperformer, in the last year, 6 months as well, when you look at it. So, what can we expect from HDFC Bank? Are you also quite positive on this stock, given that it has underperformed? Could we see a good move coming in for HDFC Bank?
Good morning, Vinny. On larger prospects, Bank Nifty, I'm extremely bullish on, and I'm expecting that, we could probably see a stronger continuation move on the banking index over the next, not just over the next couple of trading sessions, but it's more to do with the medium-term aspect of the banking index. But coming towards HDFC Bank, the stock has been an underperformer largely because the stock has been stuck into a range since, the last one and a half odd year. From the second half of 2020, where the stock started to get into a range 1450 1700 has been the larger construct of the range for HDFC Bank. There have been multiple attempts for the stock breaking or trying to break that 1450 mark. That has been met by strong demand for the stock, of course, with the liking of the stature of HDFC Bank, as well as with respect to the underperformance it has with respect to many of the other private sector banking peers in the last 12 18 months for the stock. And the other aspect is that the stock seems to have a lot of resistance at the 1700 mark, 1650 1700. Whenever the stock tries to test these levels, there is a lot of supply which comes by into HDFC Bank. So looking at the prospects, I would expect that for the near term, the stock can remain into this 200 to 50 point range for itself. But once the stock breaks past about the 1700 mark, if it happens, say by in the next few weeks or over the next few months, then I believe it could be a big breakout for HDFC Bank. So 1450 seems to be a good support level, and if the stock happens to come back to that territory, I think that could be a very good entry point from a individual who has a time horizon of at least a couple of years, if not more.